QuickBooks Enterprise 2021. Two businesses and personal bookkeeping in one QuickBooks file using classes. Expenses needing allocation. It's time to boldly account where no accountant has accounted before with QuickBooks Enterprise 2021. We are in our practice file. We currently have the open windows open. You could open the open windows by going to the view dropdown, selecting the open windows list. In prior presentations, we set up our chart of accounts and we set up our classes so that we can break out our information using those classes between two locations or two different businesses and a personal account. We've been focusing here on the vendor section, the payable section, or the expenses section, thinking about not yet the bills, but rather expenses that would be written by checks or automatic decreases to the checking account. So we're going to be continuing on with that. In prior presentations, we talked about those types of items that can be applied directly to one location or one class, meaning an expense that fully goes to business one, business two, or personal items. But what about those things where you pay a vendor and it's going to be needed to be broken out between one business and another business or personal? As much as possible, you would like to keep everything separate, but there's going to be some things that you're going to need to basically combine together. For example, if you have a home office or something like that, or the car auto expenses may need to be broken out between business and personal. So there's a couple different ways that we can deal with this. We can use the classes to break out as we enter the data. However, we may not always know when we first enter the data what the allocation should be. What percentage allocation do we need to break out? And it can be tedious to enter multiple accounts every time we enter a transaction. It could also be more difficult to memorize transactions if we are to do that. Another method would be that we would enter the transactions and assign them either to an unclassified area or to a class that we designate as having not yet been assigned, and then go back in and assign them all together, all at one point at the end of the month or at the end of the year. Let's take a look at those options now. So I'm going to go into the lists drop down and I'm going to go back into the chart of accounts. We're going to go back into our checking account here. So let's go back into the checking account. Let's say we're going to enter these transactions and later on, just so we can basically make sure they're going to be at the bottom of our chart of accounts here, or our check register. And so we're going to say this is going to be another check, and I'm not going to put a number, assuming like it's an electronic transfer or something like that. Let's go back into our chart of accounts, first hitting the splits down below. Take a look at our chart of accounts. I'm going to go through the six series again to see those items that might be split. So advertising usually would not be something that would need to be split up. We have the auto expense, that typically would be, right? So auto expense is often going to be a difficult item because for taxes, for a sole proprietorship, you may use a direct method, you might use an indirect method, and so on. So how you're going to break that up might depend on your particular circumstances, but you might have one car or one automobile that you're using for multiple different locations and need to be allocating them to different locations in some way, shape, or form. So I'm still going to be setting up 3 different accounts down below down here and then assigning different classes to them. So you won't see them side by side, but in that tiered method. And then up top, we'll set up the vendor. So I'm going to set up a vendor. Let's just call it repair shops. We got the repair shop. And then I'm going to say tab. Let's set that up. I'm going to set it up. Vendor. Now I can't really assign it to B1, B2, or P for personal here because this is going to be a particular vendor that when we pay them, we're going to have to break it out between the 3 items using classes. So that makes the memorization of the transaction a little bit more difficult. So I'm just going to set it up as the vendor here. So we're going to set that up. And the custom field can't be blank. So I'm going to say OK, and I'm going to just call it NC for not classified in the business field here. And then I'm going to say OK. So there we have that. We'll hit the split down below. And then we have the accounts that we're going to assign this to. Now we have the auto expense here, and we set one up for the 2 business side of things. Now, first let's think about what the repair amount will be. Let's say it's for $380 for the repairs. And let's say we need to break that out between the 2 businesses and personal. How do we break it out? Well, you could use different methods to do so. You might be tracking the mileage and whatnot to tie out between one area or another, or using some kind of percentage allocation that you've thought about before. Let's break it out using basically percentages, and those percentages are going to be 50, 30, 20. So actually, I don't even need the calculator. We'll just do it here. So I'm going to say this is going to be 380 times 0.5. So 380 times 0.5 there. And then I'm going to say that's in B1. And then I got 702. And notice it's nice to have these numbers that are kind of congruent in nature. So now I can line them up and I can see that's going to be the same thing, but start with a 7. And this is going to be the 380 times 0.3. And that's going to B2. And that looks good. And then I need to set up another one, which is going to be 80200 tab. And we're going to set that one up. And it's just going to be automobile expense. So automobile expense. I'm going to put 2 periods after it. And you may even put a P after it, instead of periods. Might put a P just to indicate that. And this is going to be personal. And then we will say OK. And that is going to go to the personal side. Then I'm going to say save it and close it. And there we have it. Now, if I go into this again, if I go to the repair shop again, just to see what that'll look like, delete this and say repair shop again. Notice it kind of memorizes the transaction down here. It's not going to be perfect because you're still going to have to do like the allocation, but it at least will kind of memorize the transaction oftentimes for you. So let's take a look at the profit and loss reports drop down, company and financial. Take a look at the profit and loss by class, P&L by class. Change the dates up top from 01/01/21, 12/31/21, and there we have it. So now we've got the auto up top, automobile expense here. We see then the automobile expense in the 700s is going to be here. And then for the eights, we have the auto expense down here in the 8s right there. Now notice it doesn't line up as nicely that you might see them side by side. Like this would be nice if you had the auto expense for B2 right next to it, as it would if we didn't have separate accounts numbers that were lined out. So that's going to be a drawback of using this type of method. However, those are pros and cons to any method you're going to use here. So we could still break them out by account, and it gives us those benefits, but it also results in these items that need to be allocated to be staggered in that way. Okay, so then let's go back to the checking account here, and I'm gonna delete what we have at this time. Delete these items so we can put something different here. Delete, 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 delete. Okay, let's see what else we have. Another account drop down. And we're going to go in and say, let's look at the expenses. We had automobile, bank charges. Now, it's because we only have one checking account, we might have bank charges that we should be allocating, for that checking account to the multiple bank accounts, which are usually minimal, kind of immaterial. So if you didn't allocate them to 3 checking accounts, they might not be a big deal, but it might be worth doing. So I'm going to call this the bank account tab. Let's set it up vendor. And then once again, I can't really assign it to a P or a B1 or a B2, but I'm just going to say this is non-classified and OK. And then I'm going to say the amount, let's say, is 427. And then I'm going to hit, let's say, yeah, I'll keep it at that. And then I'll hit this item, and I'm going to say this is going to be equal to the 427 times 0.5. Tab, 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 and this is going to have to be 70400. So we set that up already, and this is going to have to be 427 times 0.3. Tab, 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 and that should be the difference. This is going to be 80400. I'm going to say 80400. Bank service charges set up. This is going to be bank service charges, personal. So there we have that, and I'll save it and close it. And again, I broke it out 50, 30, 20. How did I break that out? Well, you got to use some type of activity base to do that. You're going to have to determine in some way what's the relevant factor for me to be breaking these things out. What's my primary use for this bank account, business, personal, and whatnot, so you can break that out. So typically you might look at the number of transactions you have, from one account to another, and use the ratio of those transactions to try to break out between the 3 items. So that's going to be that. And we'll talk more about different methods to come up with a percent like that when we get to like the home office usage. So I'm going to say record, and we'll say yes. And this transaction is not in balance, so that's not good, because this should be 427 times 0.2, I believe. All right, let's try that. Let's record it now. Does it work this time? It does. Let's go back to the P and L. So now we have our bank service charges here, and then we've got our bank service charges for the 7s here, and we got our bank service charges for the 8s here. So that looks good. Now, it might be burdensome for us to do that every time, to break it out between those 3. So we might want to say, hey, look, I'll just break it out later. Once I know the percentages, maybe I need to ask my accountant or something like that what the breakout will be, say for something like home office expense or something like that. So instead, then, possibly I just enter it into some kind of unclassified account and then go back in and classify it at a later point in time. So let's try another one in that method. I'm going to say, all right, let's hit the drop down and see what else we have here. So we've got the bank service charge, computer and internet. I'll keep that. Dues and subscription, insurance, interest, meals, office supplies, could be something. And then payroll, postage, professional, rent. Let's take the rent. And let's say we're paying rent on, and we work out of the home, right? So if we work out of the home as one of the places we have, then we might have a home office expense. And if we have 2 businesses, maybe we got 2, home office expenses and then personal side of the rent that we're going to be breaking out for our personal home. So let's say this is the rental agency tab, and I'll set that up. So we'll set that up, and we're going to say that this is going to be a vendor. So that looks good. I'm going to go to the additional. This is going to be not classified, and I'm going to say OK. And let's say this was 2,900 for the rent that we're going to be breaking up. If I hit the split down, now again, we have the same thing that we're going to break out. Now, how would we break this one out? The traditional method, if you're talking about taxes, if you're using a home office kind of deduction, would be to take the floor space of a particular office compared to the floor space of the home in general. That's going to be the general idea that you would do. So then you would take, the floor space of the office. If it was 300 and the whole place was 1,200 divided by 1,200, then you'd get 25%, right? That's going to be the percentage. So floor space is one example that you can break out on the percentage and take the 2 offices compared to the total, and then the difference in the floor space would be go into personal. So if you were to do that, you'd say, okay, well, maybe this one on the floor space was 25%. So I'm going to say business 1 is going to be equal to 2,900 times 0.25. And then possibly the next one we're going to say is going to be 77100. And I'm going to set that up. And that's going to be rent expense. So we'll say rent expense, and this is for B2, and I'll just say this is B2. So B2 on the class. We'll save that. So this, and then if we took the floor space again, if we took something like, well, now this is going to be the 500 for this office times the 1,200, then that's going to be 0.42 about. So I'll say about 0.42. And, oh, whoops, let's do that again. That's not right. 2,900 times 0.42. 42. There we have that. And that's going to go to B2. And notice this one should be going to B1. B2. And then we're going to have 8. So this is going to be 87100. 87100. Rent expense is what we need. So this is going to be rent expense, personal, and then we'll say save it and close it. The difference will then be going there, which was whatever the difference. So this would be the difference, which I believe is 33% now if we pull out the trusty calculator. So based on what we had the first one was 0.25 plus, I think we said 0.42 minus 1, which would give us 33% times the 2,900. And so that's going to be our breakout. So it's 25%, 42%, then 33%. So, but now let's imagine that we don't want to do that all in one transaction. Because I don't want to do that every time, or possibly I don't know what that breakout is until I do the taxes at the end of the year to get help from the tax professional to break that out. So maybe then I simply classify this as unclassified. So I'm going to say, I'm going to tab through here and just delete these items and delete. And I'm just going to put it into delete the rent expense for the 600 series. Rent for the 600 series. I'm not going to classify it at all. Now later on I'll show a method to actually put a class that will be non-classified instead of using the unclassified category. But I'm going to start off with it being unclassified here and then just put the full amount and just not assign a class. And let's see what happens if I go ahead and record it. Then I'm going to say yes, record it. And then I can take a look at the profit and loss. And if I go into the P&L, then we see this new column pops up as unclassified. And we have this item here. Once we know what the class is, how to classify it, once I know the percent, if I ask the accountant at the end of the month or so what the percentage is, or if I just want to make the data input easy and then go back in and make the adjustments all at one time to separate my duties to make the data input easy and then the reallocation easy, and then I can go back in and say, okay, now I know that this needs to be allocated out. It's going to be allocated out 25, 42, 33. And then the easiest, I think the best way to go back in here is just simply double click on this transaction and adjust it, even though that's, you're adjusting a transaction, but this amount should remain the same. You just reassign it to the proper expenses now, which would be that 67100, and then we'll do our allocation, which would be the 2900 times 0.25. And then you'd have to say this is going to be 771. And so notice you have that mirroring account numbers, making it easy to find the next one, which is going to be, meaning it's the same account number with just a 7. So this is going to be 2900 times 0.42. And this first one goes to B1 now. B1, B2, and then we have 8. Let's see, what is it? 8710. And that'll be the difference for the personal. And now we can go ahead and reassign it. So now we can save it and close it and say, okay, and then that'll reassign it out. So we can separate the duties that way. Now, I don't like having that undeposited funds come up here as much, or that unclassified area, because that to me should represent an error. So another way you could do it is set up the class that you want to be going to as saying it is unclassified, so that if it goes into that thing that pops up unclassified, that's an error. If you put it to this non-classified class, that means you purposely put it there so that you can then reclassify it later. So for example, you might go to the lists drop down. We might go to the class list and say, I'm going to add another class with the class rise up, and say we want a new one, and I'm just going to call it NC for not classified. And then I'll say okay. And we'll do a similar method now, but now assign it to NC. Also, I'll go to the chart of accounts, lists, chart of accounts. And let's find another one of these accounts where this will typically be the case. So we had the meals, office, rent. So repairs and maintenance, telephone, travel, utilities is another one that might be something that you're going to have to break out using possibly the same floor space kind of method if you have home offices. So what I'm going to do is I'm going to right click in this, I'm going to edit this account, and instead of assigning it to M1, I'm going to assign it then to the NC category, meaning every time I record something to this expense accountant, I want you to put it into the NC category, and then that just tells me that I got to go back in there and reclassify it. So even though it's in the 6th series, I'm going to say put it into not classified. So I know then to go back into it, it'll be in the column of not classified, even though it's in the 6th series. So I'm going to say save it and close it. And then I'm going to go back to the checking account, and we'll say we'll do this again and say let's do one for, delete this, utilities, Edison. And I'm going to set that up as a vendor. And so vendor, I can't put anything down here. I'm going to say not classified there and say okay. And then let's say this is going to be 640. And then I'll say split. And I want this to go into utilities. I'm going to pick the 600, or the one that starts with a 6. And that's going to be classifying it not to M1 or B1, but rather to the non-classified column. So that will be a new column that'll pop up that I can go into and take a look at. So I'm going to say save it and close it or record it. And then I can record that. And then I go into the chart of accounts. Not the chart of accounts, the profit and loss. And now I have this other column, but this other column doesn't represent like an error that I just didn't classify something. That means something different to me now. This column means that I put them here on purpose so that I can classify them at a later time. Also note that you might want these to the right. You could number like your classes, like you could call this 1 B1, 2 B2, and then personal 3 personal, so that it'll be in order by numbering your classes. So for example, if you went to your lists drop down and I say I want this one to be on the far left, I can right click and edit it and say maybe I want this to be 1 B1 or A B1. Might make some, well, let's say 1 B1. 1 B1, save it, and then I want this one to say edit, and say I want this one to be 2 B2, and then the personal, I would like to edit it and make that be 3 personal, and then the NC, edit that one, and that's going to be 4. So that'll be at the end, 4, and then closing that back out. And so now you got it numbered, you know, so this is an order. And then this one, once again, we can reclassify it. We can go back in there and reclassify it. I think the best way is to double click on it. Also note that if you have many transactions in here, however, or if you feel like you don't really want to make an adjustment to it, you could do it with a journal entry as well. Just realize that when you do a journal entry to reallocate it, then it could upset your balance sheet side of things, because if I go to the balance sheet, reports up top, company and financial, take a look at the balance sheet and change the dates up top from, I'm going to say 01/01/21 to 12/31/21 and say okay. And that, let's take a look, not that balance sheet by class, reports drop down, company and financial, balance sheet by class. That's the one we want. Customizing from 01/01/21 to 12/31/21. Going to say okay. So you can see here that we have this item that was put up here into the checking account for not classified. If I reallocate this transaction, then it'll move it over to the transactions over here, and everything will be in balance. However, if I do it with a journal entry on the income statement, meaning I make a journal entry to move it from this category over to breaking out between these 3 categories, then there's going to be a mismatch on the balance sheet, which you'd have to adjust for as well to get the balance sheet to line up. So if you use this method, the easiest way to do it is actually to double click on it, as we saw. Double click on this item and then reassign it out. So at the end of the month or year, you'd go into these transactions and then say I want this to go into now B1, and this is going to be broken out between the 640 times 0.25, and the next one's going to be the 786. I don't have that one in, and maybe not. 78600. Set it up. This is going to be an expense. It's going to be utilities for B2. This is going to be B2. Cancel B2. And then I'm going to say save it and close it. And this is going to be the 640 times the 0.42. And then we have the 88600. And that one we had set up. Tab. And that's going to be the difference for the personal side of things. So then I'm going to say save it and close it. Save it and close it. And then I'm going to close this back out. So there we have it allocated out now. So that class is now gone. We got the utilities here. We've got the utilities in the 7 series here and in the 8 series. So those are some methods for allocating out the personal side of things. And again, you could sort out these chart of accounts or these accounts so that they'll match up. And note that again, you could use another method, which again is a journal entry, to apply out the income statement side of things. And if you're not as concerned with the balance sheet, you don't need the balance sheet, then it won't be a problem. But just note when you do that, if you were to allocate out with a journal entry, then your totals would be correct on the balance sheet, but you'd have some allocation differences over on the income statement side of things. You'd have another category, and you'd have to either allocate out that category using a journal entry, or you might not be as concerned with that depending on how much you need. The balance sheet side of things, you might be using the balance sheet basically for particular accounts that you want to be tracking for. So, but the easiest way is to obviously keep this all lined up and actually record or adjust the transactions themselves, even though you have to go back into it and adjust the transactions to do it in that method. So that's going to be the allocation.